The United States is seeing a housing market softening. Take a read. 49 of the nation's 50 largest metro area housing markets have a weaker year-over-year home price shift this spring than a year ago. That doesn't mean necessarily that home prices are falling, although home prices are falling in many cities. It means home prices aren't rising the way that they were 1 year ago. But that's not all. Homes are taking longer to be sold compared to even just 2024. Plus, more people are listing their houses for sale. So home prices aren't growing as fast, houses are staying on the market longer, more people are listing their houses for sale, all while less people are interested in actually buying a house. This is why people are saying the housing market is experiencing a softening. And that's why in this video, I want to break down what's happening in the housing market and what might be coming. But first, here are a few words from my sponsor, Bilt. If you rent where you live, I just found a way to earn points on your rental payments with Bilt. Rent is expensive, obviously, but if you pay your rent through Bilt, they will reward you with points that you can redeem for flights and hotels and workout classes and even your next month's rent payment. And the best part is you don't even have to check with a landlord to start earning points through Bilt. There's no cost to join Bilt, and as a member, you'll earn points on your rent plus your everyday spending when you link a credit card or your debit card to your Bilt account and then you spend at a Bilt partner. That means you can pay your rent through Bilt, get rewarded with points, and then redeem those points for your favorite hotel or airline. There are over 500 airlines and 700,000 hotels and properties that you can redeem your points towards. But don't just take my word for it, try it out for yourself. You can take a picture of this QR code, that way they know that I sent you, or click the link down in the description below to try out Bilt and see how it works out for you. Let's take a look at the median house in America over the last 5 years. In 2020, the median house in America sold for $329,000, and the average mortgage rate in 2020 was 3.1%, which means if you put down 20% on this property, your monthly mortgage payment would be $1,123 a month on this median house. Fast forward to 2023 and the housing market has boomed because everybody is buying houses with these cheap mortgage rates. Now, the same median house in America costs $492,300, while mortgage rates have also gone up because if you remember in 2022, the Federal Reserve Bank started raising interest rates. Now, the average mortgage rate in 2023 is 6.81%. If you put down the same 20%, your mortgage payment has now gone up to $2,570 a month if you buy the same median house just a few years later. That means buying the same house in America now costs you more than 150% more a month just a few years later. But let's compare that now to 2025. Between 2023 and 2025, the median house sold in America actually fell in price from $492,000 down to $416,900, while mortgage rates really didn't change. The average mortgage rate so far in America for a 30-year fixed rate mortgage is 6.84%, which means if you put down the same 20%, now your mortgage is gonna cost you $2,183 a month, which is a 15% discount from 2023, but it's still about 150% more than 2020. This is good news for those of you that are thinking about buying a house. But it's not the best news for those of you that are thinking about selling your house because you want to sell your house when the market is booming and you want to buy a house when the market is soft. So let's talk about now how the market is softening and what might be coming next, starting by taking a look at demand in the housing market. Remember, the price of a house depends on demand and supply. When you have more buyers than sellers, that means more demand than supply, that pushes home prices up because now the buyers have to fight against each other for the limited supply of houses. And how do buyers fight? By bidding wars, by offering more money for houses, so more demand pushes housing prices up. When you have more supply than demand, meaning more houses for sale than buyers, now the home sellers have to fight against each other. And how do home sellers fight against each other? Through concessions and price cuts. So higher supply pulls home prices down. So let's dig into how demand and supply are shaping the housing market, starting with demand. And of course, you have to start by taking a look at the economy. Because when people feel good about the economy, they're more likely to make a big purchase like a house. When people are scared about a recession, they're less likely to do so. And right now, we saw the economy shrink in the first quarter of 2025. Now, I'm not going to go too deep into what's happening in the economy right now because there's a lot of changes happening with tariffs. There's a lot of uncertainty with tariffs, and we have no idea what's going to happen. Maybe the economy will boom, maybe the economy will crash, maybe the economy will go sideways, and everybody has a prediction, but we don't know for sure. So let's wait and see what actually happens. But if we take a look at the data, right now unemployment is still relatively low, hovering at around 4.2%. But businesses have also held off on investing back into their businesses until they have some more certainty on what's going on with tariffs. So when it comes to the demand side, we're not seeing a huge surge in demand. We're actually seeing a little bit of a drop off in demand because people are worried and uncertain as to what's going to happen next. People are just holding their breath. So we will know more about demand after July 8th when we have some more information on tariffs. But if we take a look at the supply side, now we have a lot more information. Let's start by taking a look at the Federal Reserve Bank's data, and what you can see is that listings of houses for sale is rising in the United States. That means when you go shopping for a house, now you have more options. But that's not all. Houses that are listed for sale are also staying on the market longer. That also means if you're house shopping, you have more options because more houses are entering the market, and the houses that are on the market are staying on the market longer, so you can take a look at the new listings and the old listings because people aren't buying them as fast. But there's one more part that I want you to pay attention to that's now starting to actually make a little bit of noise, which is foreclosures, because we're now starting to see more foreclosures on the rise. Now, I have dismissed all kind of talk about foreclosures before now, because prior to 2025, if you were facing an economic hardship and you could not make your mortgage payments, there was no need for you to be foreclosed upon because generally you could sell your house with a profit and walk away. Today, it's not that case because if you bought your house recently in the last couple of years and now you're facing a problem, a financial hardship, now it's more difficult to sell your house for a profit because, like I showed you on the whiteboard, home prices are not going up the way that they were before. So if you bought a house recently and you run into a financial hardship, selling a house is actually less profitable now because not only are home prices not growing as fast as they were, they're falling in some cities, but then if you have to pay a realtor 6% on top of that, it makes it a little bit more difficult to actually walk away with some money. If you want to walk away with some money, the general rule of thumb is that you're going to have to sell your house for at least 10 to 15% more than what you bought it for to break even. Today, if you bought your house in the last couple of years, selling your house for 10 to 15% more than what you bought it for isn't very easy. And this is where now we're starting to see a little bit, nothing significant, nothing crazy, but a little bit of foreclosures entering the market. And the reason why you want to pay attention to that, because these foreclosures also impact supply. So on the supply side, we are seeing a clear increase in the number of houses for sale. The data is showing us this, and the reason why is number one, more people are selling their houses, houses are staying on the market longer, and now we're starting to see more foreclosures. All the while selling a house becomes a little bit less profitable because home prices are not growing as fast. At the same time, demand is not growing. It's kind of at a standstill until people have a better understanding of what might be happening in the economy with tariffs. But the question is now, what's going to be coming next? Because it's not just us who have this data, it's the Federal Reserve Bank and the government. And the government and the Federal Reserve Bank don't want to see a slowing housing market. They don't want to see a slowing economy. And this is where we don't know. The president wants the Federal Reserve Bank to cut interest rates, which would push mortgage rates lower. Lower mortgage rates can help increase demand because if mortgage rates were to fall to 3 or 4%, you bet there would probably be a lot more people interested in buying a house. Will that happen? I don't know. The Federal Reserve Bank says that they don't want to cut interest rates. President Trump says he wants to see interest rate cuts. In addition, we don't know if there will be any other programs to incentivize people to go out and buy a house or grants to help people buy a house. Will that happen? I don't know. So there's a lot of uncertainties here that you want to pay attention to. But you want to remember that when you're understanding the housing market, the way you understand it is by taking a look at demand versus supply. When demand is outpacing supply, home prices go up. When supply outpaces demand, housing prices fall. And right now, we are seeing supply go up while demand is kind of at a standstill. We will have a much better understanding of demand once we know where tariffs are going, once we have a better understanding of what's happening in the economy, and once we understand if and when the Federal Reserve Bank is going to be cutting interest rates. On the supply side, keep an eye on how many people are selling their houses and how many houses are entering the market and how many new houses are being built. plus the foreclosures. When you compare the two numbers, you'll have a much better understanding as to where the housing market is going. And of course, we do keep you updated on Market Briefs, my free financial newsletter, and I have a link for you to join down in the description. If you have $100 in your bank account and you want to buy this $1,000 Gucci scarf, your bank would love to lend you the $900 at 25% APR, because when you make the minimum monthly payments, your banker gets richer. But that's just the beginning. When it's time for you to buy a house, who do you ask? How big of a house should I buy? Many times it's your banker, and they're not your financial